All right, welcome to Talk Tickers. Today, we are breaking down NuScale Power. And wow, what a quarter. Their latest earnings report was an absolute bombshell that frankly sent shockwaves through the market and has investors totally split on what to think.
So let's just jump right in. NuScale's third quarter, it was one of those classic Wall Street tales, a real story of two extremes. On one hand, you've got this absolutely shocking earnings miss that just hammered the stock. But on the other hand, you have this landmark, potentially game-changing deal with the Tennessee Valley Authority. We're talking about something that could completely rewrite the company's future.
And that's the real tension here, right? The headline numbers, they look pretty ugly. But that strategic win with the TVA, it's just too big to ignore. So you have this messy accounting on one side and just massive potential on the other. And that's exactly why our call on the stock today is cautious constructive.
Okay, let's get into it. First, let's dig into those numbers and figure out what's really behind that big miss.
So this is the number that really spooked the market. A GAAP loss of $1.85 per share. Now to put that in perspective, Wall Street was looking for a loss of just 13 cents. So yeah, a huge, huge miss. So where did that loss come from? Well, here's the twist. Almost the entire thing, we're talking nearly $500 million, came from a single, one-time, non-cash charge. This was tied to a new partnership agreement with a company called Entra1 Energy. The key thing to remember here is that this is an accounting entry. It's not like they actually burned through $500 million in cash from operations.
Now, on top of the EPS miss, revenue also came in a little light. But, and this is a big but, their balance sheet actually got a lot stronger. They did a capital raise, and that left them with over $750 million in liquidity. That is a pretty substantial cash runway to work with.
Okay, so we've unpacked the messy numbers. Now let's get to the real headline here. The thing that has all the bulls excited. This game-changing deal with Entra1 and the TVA.
We're talking about a program to deploy up to 6 gigawatts of new nuclear capacity. And it's all going to be using NuScale's small modular reactor, or SMR, technology. 6 gigawatts. That's a huge number.
So what does 6 gigawatts actually mean in terms of hardware? Well, it breaks down to about 72 of their SMR power modules. 72 of them! And those 72 modules aren't just going anywhere. They'd be installed across as many as 6 brand new full-scale power plants, all in the Tennessee Valley Authority's territory.
And if you're still trying to wrap your head around the scale of this thing, the CEO, John Hopkins, put it this way. He said it's enough electricity to power the equivalent of the entire Dallas-Fort Worth metropolitan area. Let that sink in. This is, by far, the largest planned SMR deployment program in the history of the United States.
So you have to ask, what's behind this massive push? Well, a huge driver is the absolute explosion in power demand coming from AI and data centers. Utilities are scrambling to find new, reliable, and carbon-free sources of power. And this isn't just some corporate wish list either. This has support at the highest levels. In fact, NuScale and Entra were specifically named in a major US-Japan agreement aimed at developing power for, you guessed it, AI. So here's the million-dollar question. If this deal is so massive, why on earth did the stock get hammered? Let's take a look at the investor pushback.
Right after the earnings call, the stock dropped like a rock, down 6.6% on really heavy trading volume. So despite this huge announcement, it's clear there was a ton of skepticism from investors.
And if you want to know why they were skeptical, you just have to look at the Q&A part of the earnings call. It was super revealing. A few key concerns really jumped out.
All right, so the questions really boiled down to 3 main things. First, analysts were asking, who is Entra1? They wanted to know about their track record, their credibility. Second was the payment structure. It seemed weird to some people. Why is NuScale making this huge, almost $500 million non-cash payment for an agreement that isn't even binding yet? And that brings us to the third point, deal certainty. And this is the big one. This whole thing is just a framework. It's not a finalized, signed on the dotted line power purchase agreement, or PPA. And until that PPA is signed, the deal could still fall apart. So with all that in mind, here's our take on NuScale. This is the next call.
Okay, so our rating on the stock is market perform. Here's our thinking. That massive potential with the TVA deal, that puts a pretty solid floor under the stock price. It's hard to see it falling too much further. But all that execution risk and the confusing financials, that's going to create a ceiling. So we think the stock is probably going to be stuck in a range, trading between roughly 27 and 33 bucks, until we get a real catalyst.
And what is that catalyst? It's one thing and one thing only: concrete news on a binding PPA with the TVA.
And that brings us to our outrageous but plausible trade idea. You know, the key word here is volatility. The market is just completely torn. You have this huge bull case on one side and a pretty significant bear case on the other. That kind of tension is exactly what creates big price swings. For options traders, this could be an opportunity to play those expected swings that are going to happen the second any real news about that PPA drops, whether it's good news or bad.
And just as a final reminder, remember that this is not financial advice.